news on the war has somewhat died down, but what is keeping investors busy these days is news on mega IPOs coming up. Yes, the NSE is expected to raise nearly 30,000 crores this year, and the Geo IPO is also on the cards. Here, in the next episode of Decode, Shyam, being an investor himself in the NSE, shares his views on the business, the financials, and the valuation. Hey, hi, Shyam. Any investor who watches you closely uh, perhaps knows that you invested in the unlisted shares of NSE. And now the news that the NSE IPO is going to come up soon, I think during the festival season, is out. So, what was your thought process when you picked up those shares, and what was the valuation at that point?
The valuation was roughly around 40,000 crores, and the stock price was around 820 rupees. IFCI was a big seller, and a lot of stocks were available. You could buy as much as you wanted because very transparent selling mechanism. You can put in a bid and you could buy. So it was easy to buy. At the time, there was a lot of supply of NSE shares, mainly from these institutions and some FIIs also. So this was sometime in 2019, and we had put in a bid and they agreed. And by the end of 2019, we had purchased these shares. So it was fairly straightforward. I wish I had bought more shares, but whatever we wanted, it was available in the market. And that was the beginning of this massive trade that you have seen in the NSE shares. At the time, it took some time to put in the transaction also, because they had to approve each shareholder one by one. So all that took a few months, and then by the end of the year in December, we purchased these shares. I felt that as a franchise in 2019, remember this buy at any price was gaining momentum. So I found that the blue chips of the country were all trading at very high valuation. Relatively, I found NSE to be very cheap. And I also felt that the penetration in India at that time was very low. NSE had 90 plus market share. At the time, BSE was far weaker than it is today. So we felt, why not buy shares in NSE rather than buy any of the other blue chips. And we knew the company didn't need any money, so most of the profits would be dividended out. So I felt that the price was attractive. You'll get very good dividends. As the company grows more and more, your dividends will keep growing, and that has been true. On our original acquisition price, today our dividend yield is very high actually. So the idea was there was safety in it. And the only factor that at that time was open-ended was the duration it would take to IPO. It's taken nearly 7 years. So that was the open-ended thing. But I was ready. As long as a good company, why not? That was the thought process.
Okay. You said 7 years, but originally I think DRHP was filed in 2016, as early as 2016.
That didn't go through.
Yes. I was going to say that after that, a lot of problems have come up for the NSE. It hasn't been a smooth ride, both for the company and for probably investors, private investors who got in. We had the co-location scam, we have those executive appointment issues and so on. A lot of issues have been resolved, which is why I think the IPO is coming out now. But there has always been this overhang, number one. And number two, also the fact that probably the perpetrators also got off very lightly. So, given these corporate governance issues, it hasn't been a smooth ride. So, what were you thinking when these issues surfaced? Number one, and number two, had it been some other company, because you clearly explained the advantages that NSE as a company had it been some other company, would your thought process have been the same?
See, it's a nationally important institution first. Second, the issues mentioned, in my view, were never going to recur. At the time the shares were being offered to us, I felt that though we had heard about many of the things that later surfaced, my thought process was, even if all these issues were there, the entire team had changed, the people were new, and we felt that that issue was behind us. And it's a nationally important institution. And the best way for that institution forward would be to bring it to public accountability as a listed entity. So it was a logical extension. But however, the way the events unfolded and the way they were handled
Yeah.
took a lot of time,
Yeah.
because government would always be very sure that it has handled everything responsibly before allowing an entity which has faced such issues become owned by the public.
Yeah.
So it took its time.
Yeah.
But we were sure that the issues were behind. As an investor, I felt it was never going to come back. It was history. The only question was how the government would deal with those issues retrospectively. I mean, what kind of deterrents, what kind of fines, what kind of orders would be passed on anything that the government found unacceptable in the past.
Yeah.
But those are things that we don't control as investors. But I felt that the government would eventually come to a place where it would decide on those past issues, set the issues straight, and allow the exchange to come clean and move on.
Right, right. No, see, generally when we look at, stocks to own, we place corporate governance on a very high pedestal. So my extension to that question was also whether if it was some other company, would you look at it the same way?
If I feel that the governance structures are in place and it would definitely be very different from the past, yes. But you have to satisfy yourself. In this case, this is a public institution. So government changed the entire management.
True. Yeah.
So it was clear that the new people coming in were likely to, maintain high standards.
Okay.
It was clear.
Okay.
And the government commitment on that was also very high. Public scrutiny was very high. Would we get the same kind of scenario in another company? I won't rule it out. I'll give you an example from the past of a company which went through such a situation. The Satyam example is a very good example.
Yeah.
It came down to some 9-10 rupees. Right? From there it went to probably 100x. So if you were satisfied that the company had value and that it was not going to be allowed to fail and that governance would be restored and shareholder interest would eventually prevail, then it was an opportunity to participate. I actually had another example where similar circumstances where government took a view on the management and there was a change in shareholding. The shares fell by a very, very steep margin to a bottom. I bought around that bottom and I was convinced that it would do well. I am talking about MCX, a similar story.
Yeah.
So actually we have done it in both the places. So it's not as if this was an exception. There was another example, and in any company, if we feel that the governance is going to be restored and the standard of governance are going to be brought to levels which will be respected by the market in the future, and the market is not pricing it in, there would be an opportunity. I would look at it.
Okay, okay. So when we think of NSE, we think of a business that has a lot of positives. But if you drill down the revenue mix, typically like any exchange, 70-80% of the revenues come from transaction charges, and in that again 80% at least comes from options.
Correct.
Now, inherently, there is this story about Indian retail investors losing their money in F&O. So what happens is, this has been a pattern, and like last year saw a 1 lakh crore net loss for retail investors, and the reports also say that FY26 also the same 1 lakh crore loss. This has happened at a time when SEBI has also been tightening the screws here. So this brings up the question, like, you're both you act as an advisor to retail investors, and at the same time you are also an investor in NSE. As an advisor, how would you look at this? And as an investor, what is the regulatory risk that this stream of revenue faces?
See, firstly, I am of the view that option trading is not meant for retail investors. But you cannot stop somebody from doing what they do. And generally, if you see, retail investors always chase trends and fads. You take this year, between January and March, over 1 lakh crore was invested in gold and silver ETFs at the peak. And it's all down between 25 and 35% today as we speak. So imagine retail investors losing 35,000 crores investing in gold and silver
Yeah.
within less than 6 months,
Yeah.
within a few months. So, however hard all stakeholders try, keeping the retail investor out of risky places, out of places where speculation is very high, is a next to impossible task. Because today technology has completely eliminated the friction in transactions.
Yeah.
So when you have removed the friction completely in transactions, you are enabling speedy transactions, which in turn accelerate decision making speeds, which in turn encourage speculation, and eventually always will lead to losses coming in waves in different asset classes. The pattern, the model and the infrastructure is actually curated to enable this.
Okay.
You see that people lost 1 lakh crore in F&O, mainly options. You will see people losing 1 lakh crore in this calendar year in gold and silver. Would you blame anyone for that? That, oh, these are the people responsible for the retail investors losing 1 lakh crore in gold and silver. I'm talking of just in the ETFs. I'm not even going into the jewelry purchase and other things. And this is not new. In 2008, I still remember, over 25,000 crores was collected in infra and capital goods funds. Through IPOs, NFOs. All those NFOs lost more than 50%. Maybe even higher. So this concept of capital chasing risk, which has no reward coming, is not new. The fact that it has happened very visibly in F&O and SEBI was transparent to put it out in the public domain is what makes us see this as a sore thumb. But I think this is a regular feature. Now I'll give you one more example of what is going on now. Today we have already crossed 30,000 crores in SIF. The primary space where these SIFs are going to try and generate alpha or better returns is again F&O. So through mutual funds, you are saying that you will collect another 1 lakh crores, right? And you will, deploy the same money in the same segment. I think that structurally we are not moving away from speculation. We are actually more into speculation. So this year you see, I told you, over 1 lakh crore in gold and silver. Now you may end up giving another 50,000 crores to SIF by the end of the year, right? 1,50,000 crores, all in speculative capital. So I don't think this is going to change. It's only becoming bigger and bigger because people want such products. My being an advocate against that product, or my advocacy against buying gold and silver this year, or buying products which speculate too much, hardly matters. The industry is structurally moving like that. Institutional investors are actually not the reason for this. It's the public who want all this.
So you don't see any threat from the revenue mix towards options coming down.
So we are still a very underpenetrated market, and if you are going to keep on producing products like dynamic asset allocation products, SIFs, these are all products which are only going to primarily try to generate returns through F&O.
So the institutional segment will be more participative, and that will take care of.
It will be the proxy for retail to participate in it. So you are creating a institutional vehicle which will do the same thing. Whether right or wrong is a different debate. That's not what we are talking here. But this is here to stay.
Okay, got it. So apart from the transaction charges, which is the bread and butter, now there are growing avenues like listing services, then data related services, indices licensing, and so on and so forth. So the DRHP specifically puts out that the focus areas for any Indian index will probably be index licensing, given the massive rise of passives. And number two is also IFC, trading in the IFC. So now from my conversations with you, I always get the feeling that you're not a great advocate of passive investing or investing through the GIFT City. Now, how do you see? I mean, do you see these kind of when the exchange is gearing towards sourcing more revenues from these streams? Do you see this becoming
See,
mainstream?
the more time you spend in markets, the more you realize that novelty will attract capital. Now, as an investor, am I drawn to novelty? Answer is no. I don't see much of benefit chasing novelty. But the entire market is chasing novelty. It will continue to chase novelty. And there is nothing that can stop this. So I would think that the same thing that happened in the US, where Vanguard replicated and created so many passives, will happen in India also. And people will chase novelty. I don't know how many of them will be successful. But they will still try to achieve success by chasing novelty. That's the first point. So you will see a lot of capital going into these kind of things. Then you come to the issue of other optionalities. Some of these optionalities could become big. Okay. But I think the core business will continue to drive this company.
Okay.
Other things are all incidental.
Okay. Okay.
I think it's the core business which will drive this company. And it's a fairly tightly run business. And I don't see anyone going into their current operating business model to disrupt it in such a way that it squeezes their business model.
That's true. So, yeah, so you see the current business being the predominant revenue earner for the time being.
I would think on a sustainable basis.
Sustainable basis.
Yes.
Okay. And, when you look at NSE and when you talk about it, I mean, not you, but generally, so the idea is that you can't find any negatives there. So, to any stock or to any investment decision, there is also a downside or a risk. What would you call as a risk factor for this IPO?
For the IPO?
IPO or for even NSE when it becomes a
See,
listed
there's a
entity.
problem that you're only going to sell 6% of this company now.
Yeah.
But technically, 100% of the company is liquid.
Right.
Okay. There's no promoter.
Yeah.
So, after 6 months, I think the entire equity is going to be available for sale. And there will be a lot of supply.
Yeah.
Because you look at what happened in the NSE. So, we bought one share. They made it 5. And for an unlisted company, you need to own it for 2 years. So, they actually created a squeeze in supply of the shares first. Because of the 4:1 bonus. So, you can only sell the original shares. Rest if you sell, it's very high taxation. Short-term capital gains. So, you wouldn't want to do it. So, effectively, when all these shares come into the market, which is probably, it should happen a few months after the IPO, all the shares will come into the market. A few months after the IPO, 100% of the equity. 6 months after the IPO, I'm pretty sure that 100% of the equity is going to be available. So, at that point, selling pressure will go up. At that point, selling pressure will go up, and you have to see where the market is, where the volumes are in the market, and whether the market is showing an upward trajectory in volumes. If you see the market trading volumes on an upward trajectory, then I think there won't be too much to worry. But the supply of the entire equity of NSE, which is 5 lakh crores into the market, is definitely a risk. See, you see what has happened in HDFC and all the private banks. I think you saw an article or a tweet which gave out that nearly 1.5 lakh crores, there something near that, has been the sale of FIIs in private banks.
Right, yes.
Correct? I expect a similar sale in NSE. So then you see where the prices of private banks fell. They fell nearly 20%.
Right.
So the same kind of pressure can come on the NSE stock price also.
Understood.
It's a given. So that has to be absorbed. I don't know who's going to absorb it.
Yeah. So from a business perspective, again, the risk factors?
Is a bear market globally impacting us, and then people leaving equities as an asset class. Those kind of events are always there. But again, even if you have such an event like that for a year or two, again, the recovery will take it to a stronger place only. See, your penetration is very low. The number of people investing in equity is still very low in India. Most of the people are going to come to the equity market. It's only a matter of when, not if. So effectively, even if you see a bear market in the overall Indian context, and that is a reflection of a global bear market, then you will see valuations, come down from the current 50 PE, which I think the IPO price. Maybe it can come down to maybe 30 or 35 or whatever. But at that point, again, when the market sees growth, right, it
Yeah.
will justify the P at some price,
Yeah.
find it attractive, and then again buying will start moving up. That cycle will always be there in any IPO.
True.
We call it price discovery.
Yeah.
Right. I believe that NSE will have a more volatile price discovery. That is my expectation.
Okay.
Anyway, it can't be more volatile than the last 5 years, right?
Yeah.
So as a shareholder, what do you look at? You look at dividend. Dividend is good. So just wait.
Yeah. Dividend is good. Financials is like excellent. Excellent. And
there is never a problem with the balance sheet of NSE.
Great moat also for the company. So that brings me to the question of the IPO pricing. Now, the numbers are out anyway. It says a 30,000 crore market cap and
at around
5 lakh
2,000
crore.
crores.
Around 2,000 and all that. So do you think that this is going to be the fair price when you say volatility also?
See, from a point of view of price discovery, this was the price discovered by the market until recently. So they are not pricing it at a discount to that. If they price it at a discount to that, so much of transaction has happened in the last 1 year. You are doing it in a way prejudicial to the people who have transacted in the run up to the IPO.
Yes.
If you overprice it also, you are creating a opportunity for those who can sell to sell, which is these institutions who are likely to be free to sell. So I think a balancing act was required, and this price is more like a balancing act.
Yeah,
but it assumes that the PE ratio will come down because of further growth in the next 1 year or 2 years. So in March 2029 itself, this has to grow.
Okay.
And March 30, it should have grown very well from where it is today. So the revenue and profit should grow, justifying this 50 PE. Now that is open to debate how that's going to happen, because global factors can affect this in many ways.
Okay. And there's also this bigger picture to investing in the private space. A lot of platforms have emerged and a lot of retail investors have been trying their hand in the unlisted segment. Now, what kind of a mindset and a behavioral makeup should retail investors have and should they at all go to the unlisted space?
It's a difficult one because what is your time horizon? So I can tell you with a fair degree of confidence that all these retail investors who are coming into pre-IPO are coming to make a fast buck. Suppose the IPO gets withdrawn for some strange reason, or market is not there for the IPO, then they'll get stuck. Then look at it, there'll be a lock-in for 6 months. So in the 6 months, suppose all the volatility going up, coming down, everything happens, and the price is below the IPO price, then the whole purpose gets defeated. So I think the problem with IPO investing based on a listing pop is that you are depending too much on the momentum. And momentum can recoil. The reverse also can happen. And sometimes it has happened. I'm not saying that it will happen in this case, but you're trying to factor in too much momentum into the IPO price. And if something happens in the market, sentiment changes, some global event happens, or some FI who already owns the shares comes to sell it, all these things are risk today.
So the very intriguing thing about NSE is that we call it the market leader, the monopoly holder, and so on. But if you see the way the current pricing is going, it looks like NSE would be probably coming out with an IPO at a discounted valuation to the BSE.
That's
so
a surprise. See, when we bought NSE, BSE was trading at a very low valuation. Market believed that the BSE doesn't have a story to tell, and that it was not growing, and that there are too many ifs. But as the NSE valuation went up, a lot of people bought the BSE shares
as a proxy.
As a proxy. Now today, this trade has got overdone, and people think that BSE will be able to snatch some market share from NSE.
Actually, the interesting thing here is that if you see listing services as a domain, it's a very small number. But actually, BSE earns a higher revenue from listing services than the
because
NSE.
I think the number of companies are higher, probably. Anyway, so the point is that people see that, okay, now BSE is led by somebody from the NSE, so you can replicate what the BSE, what the NSE has done in the BSE and all that. But I think it's a long shot. We have definitely overvalued BSE. and many people want to use the overvaluation of BSE to justify the valuation of NSE. So that's one little bit of a spin that we have to deal with. But eventually, I think that because of the sheer supply, we could see a situation where NSE gets sold a lot once the barriers to selling go away. And remains to be seen where it settles. Also the earnings. Suppose you are having a 20-30% earnings growth. Then chances are that the IPO price will become the bottom or something close to that.
It will catch up.
So we'll have to see what happens in the next 1 or 2 years. But right now it looks dicey only. I would say it looks dicey. But from a long-term perspective, I don't think there's much of a problem.
Hope this conversation gave you a bird's eye view of the business of NSE and the factors to look out for when the IPO opens. Thank you for watching.